Good afternoon, everyone. Assalamu alaikum. This is Hussain Haider. I am the Chief Investment Officer at JS Investments. I'm pleased to welcome you all to today's webinar on the JS Momentum Factor ETF. The fund has demonstrated remarkable outperformance compared to all major equity indices in Pakistan. And given the numerous queries we often receive about the fund, we decided it was the perfect time to delve deeper into this topic. To provide clarity and structure, today's session is organized around 7 key areas. Basically, these will be questions that I believe will address the most important aspects of the fund. I will go through each question in detail in the following slides, and I will be happy to take your questions at the end of the presentation. So we will start with ETFs 101 by revisiting the basic concept of an ETF and how does it differ from a conventional mutual fund. What does momentum factor mean? Is there a track record of the momentum factor globally and locally? Next, we will review how the portfolio is constructed. Then, what are the costs involved? And who are the key participants in the operational management of an ETF? And lastly, and most importantly, why should one consider investing in JSMF ETF? Let's start with the first question. What is an ETF and how does it differ from a mutual fund? So basically, an exchange-traded fund is an investment fund that trades on stock exchanges, much like individual stocks. But unlike mutual funds, which are bought and sold only at the end of the trading day at their net asset value, which is called NAV, ETFs can be bought and sold throughout the trading day at market prices. Another significant difference between ETFs and mutual funds is their management style. So ETFs are predominantly managed as passive funds, while mutual funds are generally actively managed. Now let's discuss the creation and redemption process for ETFs, which is basically a very crucial aspect of their operation. And sometimes it's often confuses investors. So we have tried to keep it really simple. So when an investor purchases ETFs in the secondary market, the brokers, or as they're called, the authorized participants, or the market maker plays a key role. So here how the whole process works. Let's start with the creation process. So here what happens is that when an investor buys ETF shares, the broker or the authorized participant buys a creation basket, which contains the ETF's underlying securities from the market. The broker then delivers this creation basket to the fund. In exchange, the fund issues ETF shares to the broker, who subsequently delivers these shares to the investors. So that basically sums up the creation process. So essentially, what happens that every time an investor buy an ETF share, the broker will have to buy the underlying securities which constitute the ETF itself. So that is the main concept. Moving on to the redemption process, when an investor sells ETF shares, the process works in reverse order. The broker receives the ETF shares from the investor who's actually selling and delivers them back to the fund. In return, the broker receives a creation basket containing the ETF's underlying securities, which the broker then sells in the market. These processes are quite dynamic and occur in real-time basis as part of the normal trading activity on the stock exchange. And this mechanism ensures liquidity and helps maintain ETF's market price close to its net asset value. The creation and redemption process is fundamental to the ETF structure, providing investors with an efficient and transparent investment vehicle. So how do you invest in JSMF ETF? So it's fairly simple. The fund is actually listed on the Pakistan Stock Exchange and can be traded like a regular stock. At present, the ETF share price is around 90-ish rupees. Since its minimum lot size is 500 shares, the minimum value one can trade or buy or sell is 9,500 rupees, as you multiply 500 shares times the price of the ETF. So obviously, in order to trade an ETF, you will have to open a brokerage account with any brokerage firm of your choice. So moving on to the next slide. Speaking of size and growth, the global ETF industry reached a new milestone at the end of last year, which was 2023, with assets of almost $12 trillion and close to 12,000 different sorts of funds. This represents a compounded annual growth rate in assets of 17% over the last 10 years and 10% based on the number of funds. During 2023, which was last year, ETF assets increased by 26% as the number of funds grew by 7%. It was mainly after the global financial crisis in 2008 that investors started to switch from actively managed funds with relatively poor returns to passive funds with inherently low fees. And as you can see on the slide, it's been 55 consecutive months of ETF net asset inflows globally. So that's a remarkable number. Likewise, if you see the last statistic on the right-hand side is that 41% is the proportion of millennials portfolio in the ETFs these days. Moving on, so here are the top 5 ETF managers globally, and these are some really big names. BlackRock and Vanguard each manages over $2.5 trillion in ETF assets. Likewise, State Street is another big name, and it manages over $1 trillion. Invesco manages over $500 billion, and Charles Schwab, another big name, it manages almost close to $300 billion in ETF assets. All right, let's now discuss what is momentum factor. Very briefly, we have explained this concept in the following 3 points. A factor in investing is any characteristic explaining an asset's long-term risk and return performance. The momentum factor reflects the tendency of winning stocks to continue performing well in the near term, benefiting from the persistent market trends. MSCI research indicates that historically the momentum factor has been a strong generator of excess returns, particularly during extended market trends. And here, just so you know, are the 2 pioneers of factor investing, Eugene Fama and Kenneth French. They are renowned economists known for the development of the Fama-French 3-factor model, which expands on the capital asset pricing model, CAPM, by including size and value factors to explain stock returns. Now, here we have shown 2 quite interesting reads on momentum and factor investing. These are relatively old articles, but offered invaluable insights. And I would just like to take a quick minute over here to expand on what these 2 articles have actually shed light on. The article on the right side explains that contrary to the efficient market hypothesis, which suggests that past price movements are not indicative of future performance, the momentum effect shows that stocks that have performed well in the past tend to continue performing well for quite some time. And this phenomenon has been observed consistently over many decades and across various markets, suggesting that investors can potentially exploit this anomaly for high returns. Now, the heading "Why Newton Was Wrong" in the article from The Economist refers to Sir Isaac Newton's law of gravity, specifically the principle that what goes up must come down. This analogy is used to contrast the belief that financial markets, like objects under the force of gravity, will inevitably revert to a mean with the phenomenon of momentum investing. The article argues that contrary to this expectation, stocks that have performed well recently tend to continue performing well, thereby challenging the efficient market hypothesis that price movements do not predict future performance. These pictures present some interesting signs of the times, which are indeed helping push momentum these days. The narrative of soft landing appears to be gaining traction globally, particularly in the context of the US economy. Then, as you all know, rate cut expectations and buy the dips are commonplace these days, driving equity markets higher and higher. Moving on to our next question, basically, which where we have tried to answer that whether there is any track record that exists for momentum investing globally as well as locally. So yes, indeed, there is an extensive amount of data available to prove consistent long-term outperformance of the momentum factor investing across markets. And quickly, if you look at this slide, we have gathered the MSCI indices capturing both the momentum index as well as the underlying region or the country's index performance. So as you can see, for instance, the world index, it has returned 8%. The bars on the yellow, they represent the individual country or the region's index, whereas the dark blue bars represent the momentum index. And the world index, as I was referring to earlier, there you could see that on a global scale, the momentum index has returned almost over 11%, since the fund's inception, which was way back in 1994. And obviously, the story is pretty much the same across all the markets, even if you see in terms of the last 10 years, as reflected on the graph on the right-hand side. So the darker blue bars are higher than the yellow bars, basically reflecting the momentum's outperformance. So basically, I was just going to quickly touch upon the point that before we launched this fund, we had back-tested data for almost past 20 years for our momentum index vis-a-vis the KC all-share index. And there we found out that with monthly rebalancing, momentum achieved 25% per annum gross return versus KSE all shares 19% per annum. And likewise, even if you look at the performance on a risk-adjusted return basis, the Sharpe ratio came out much attractive at 1.5 as compared to 1.25 for the index. And obviously, the performance of the fund, since its inception, and especially since this rally actually began since June of last year, The returns are speaking, for the momentum strategy for itself, basically. You can see in the line chart, the fund has, phenomenally outperformed all the major indices. And over here, looking at the bar charts, it gives you a much more clearer picture. 90% return since inception. Fund was launched in January of 2022. And on the right-hand side, you can see the performance since last year, which is returns from fiscal year to date, 129%. And the next best return comes at around 86%, which is KSE 30 total return index. Outstanding performance. All right, moving on to the next question, which is extremely important, and it's one of the most commonly asked questions, the queries that we receive from, the investors and the potential clients, is that how do we construct our portfolio? So basically, there is a very structured process. There is an index methodology that we follow, and we coordinate with PSX on this, on a monthly basis every time we rebalance the portfolio. So keeping things simple, what we basically do is that we first of all apply two key filters. One is related to the market cap, and the other is based on the average traded value of these stocks. And note that the underlying universe is KSE all shares. So the story begins with almost like over 500 or 600 companies, right? And then we gradually, once we filter these, the list. All right, so once we have basically applied these two filters, we apply the stock selection criteria, which basically involves ranking these stocks based on their total return for the preceding 1 month. And along with that, we again do an exercise involving ranking these stocks based on their traded value for the preceding 2 months. So based on these two stock selection criteria, we come up with a combined momentum score, which basically helps select the top 10 constituents for the ETF in an ascending order. And then, the final step is basically assigning the weights. And for weights, we use the last 60-day traded value to assign weights to each stock, which is basically proportional to its share of the total traded value of the 10 stocks. And redistribute any weight which is exceeding 20% among the remaining stocks on a pro rata basis. So on a net basis, the entire portfolio comprises of 10 stocks, where one stock can go as high as 20% in terms of its weight in the index, in the portfolio. And as you can see on the left, obviously, it's the universe. We do the selection, and final step is basically rebalancing, because, the weights and the entire dynamics keep on changing on a month-to-month basis. Now, what are the costs involved? Again, it's an important question. And in case of ETFs, pretty much like any other mutual fund, we've got expense ratio, which obviously is the most visible cost, covering management fees and other operational expenses, which is expressed as a percentage of the ETF's assets. Then obviously there are trading commissions, because the ETF shares are bought and sold in the market, and there will always going to be a trading commission involved in trading. And lastly is the bid-ask spread. It's basically the difference between the bid, which means the buying, and the selling, the ask price, which again varies with the market conditions. So these are the basic costs and fee pertaining to the ETFs. So all right, now what are the key participants in the operational management of an ETF? So firstly, there is an ETF sponsor / owner, issuer, you can call him fund manager, and more simply, it's the asset management company. In our case, obviously, it's JS Investments. Then there were always going to be an authorized participant who is basically a broker dealer, or you can also call him the market maker. In this case, it's JS Global. And obviously, since the trading is conducted at the local stock exchange, we've got the Pakistan stock market, the Pakistan stock exchange, right? Similarly, we need a depository and the custodian for the custody of the underlying securities. And there we have got the central depository company, CDC. Along with that, we need several ETF administrators, which are often basically set up in-house, or they are often outsourced as well. These include technology services, operational services, compliance oversight, independent auditor, fund counsel for legal affairs, financial and tax administration, and so on. And lastly, obviously, we need the regulators. And in this case, it's SECP and the State Bank of Pakistan. So these pretty much covers the major ETF participants pertaining to the overall management of the ETF. Now, finally, we have come to our most exciting section, which basically addresses the point that why one should consider investing in an ETF, especially JSMF ETF. So the first argument that goes in favor of having momentum in your portfolio is basically valuations, which basically gives us a lot of sort of a margin of safety in terms of where the prices are vis-a-vis in terms of its, relative valuations. Or more recently, if you look at where our market was trading just a few years ago, back in 2017, which I'll come on to the next slide. But on this slide, you can see the valuations, price to earnings ratio, price to book value, the real interest rates are turning positive after a long time. The yield curve, there's been a slight downward shift, and moving on within inflation expectations, especially for this month and going forward into the second half of the year. There are quite positive expectations that the inflation will going to ease off. So in totality, a strong case for valuation supports having JSMF ETF in the portfolio. And, personally, if you ask me, I would suggest any one of you who is bullish on the market should have at least, say, 20% of your portfolio dedicated to JSMF ETF. In the next slide, I have just sort of tried to expand on the same point where I have plotted the KC100 return and the KC30, which is the price index. As most of you would have a good idea of what is the difference. Obviously, KC100 includes the impact of dividends as well. So comparing the index levels from its last peak, which was back in 2017 of 52,800 odd points, you could see that based on KC30, purely based on the price, the market's still down. And if you make the sort of comparison with the KC100 index, and I apply the KC30 return index to the 100 index, the equivalent level of index comes to around 45,000. So in simple terms, if we exclude all the dividends from the KC100 index since its past or last high, the index is presently hovering at around 45,000. And here, if I also incorporate the exchange rate differential, because last time back in 2017, the rupee was at 105 rupees against the dollar, whereas presently it's around below 280. So if you factor in that as well, the index, the dollar equivalent price index, comes to around merely 17,000. So from the last high to date, even if you compare it in terms of the market cap, we touched almost $100 billion last time in 2017, and presently it's close to, if I'm recalling it correctly, must be around like 36 or 37 billion dollars. So we're down almost over 60%. So that gives you a sense of where basically the valuations are presently. Even if you compare this with the level of the GDP, last time we were at around close to the entire market cap of the Pakistan equity market was at around 30 or 35% of the total GDP. And presently we are hardly at around 10%. So a significant room is there for upside, and obviously that gives anybody a comfort, and then obviously raises the point that why not give momentum a chance. Now here I would like to reestablish the fact that JSMF ETF is the Pakistan's first smart beta ETF. Now just let me quickly touch upon that, what is smart beta? Smart beta is simply, how one practically executes factor investing. It is as simple as that. And it gives you the best of both worlds, basically. It's sort of an alpha investing blended with passive investing. Being fundamentally different from the traditional passive indexing strategy, Smart Beta is an enhanced index strategy that seeks to exploit certain performance factors in an attempt to outperform a benchmark index. And also different from the traditional active management, it seeks to invest in customized indices or ETFs based on predetermined factors to enhance returns, improve diversification, and reduce risk instead of selecting individual stocks or sectors to beat a benchmark index. So being the Pakistan's first smart beta ETF, I think this makes a strong argument for having an exposure to JSMF ETF in any portfolio where you're seeking growth and where you're seeking higher returns. Moving on, this slide is basically, I deliberately kept it on to the last part of our presentation because I just wanted to establish a very important point over here. Basically, as you can see, this simply plots the share price of JSMF ETF along with its volumes. And you can see that the volumes have been there's a sporadic pattern. Quite often you see hardly any sort of volumes in the ETF, and sometimes you see some decent volumes, right? But here I want to make a very important point, because there exists a misconception among investors and traders alike that ETFs are quite thinly traded and in fact they're illiquid securities just because they don't see healthy volumes or turnover in these shares. In fact, the reason for this misconception is, in our personal view, is that masses at large, or, investors or traders in general, are not quite well versed or knowledgeable about the underlying concepts behind ETF. Let me clarify this. Now, in case of ETF, there is always going to be a market maker on the other side of the trade, ensuring liquidity in the share, whether you actually want to buy or sell. And yes, I mean, if you want to buy as many shares or you want to sell as many shares you want, it is possible, provided any single security within the ETF portfolio hasn't hit its upper or lower circuit, as is normally the case with any other stock at the exchange. So basically, that's what it is called market making. And ETFs cannot really work without market making. So there will always going to be at least one in all the ETFs. So the point that I want to establish is that volumes are a non-issue for ETFs. So having said that, I would like to quickly touch upon the other major, benefits of investing in momentum. And obviously, with the help of a momentum fund, you could capture sort of consistent outperformers. And that's, how the performance has been built, under this fund, where it has consistently sort of captured outperformers. Then obviously you can pair momentum with other strategies. You can obviously get a chance to outperform during economic expansion. And most interestingly, the strategy follows a disciplined rule-based approach and therefore controls for human emotions, which are often affected by market volatility and sentiment. So basically that from my end, and I welcome any questions that you all may have regarding ETF in general and obviously specific to our JSMF ETF. So please feel free to ask any questions that you have in your mind. All right, so let's start. So let's first address some basic questions, or in totality, if I just sum up, is quite a few of you have asked that when it would be an appropriate time. And obviously in investments, it's always like a very, very, I would say a question that's most often asked to fund managers. So as I had already spoken when I was basically talking on valuations, which gives the most sort of point in terms of which provides most comfort, that since the stock market as a whole is still quite cheap in terms of valuations, why should not one give a chance to momentum, which is still sort of going really strong? So in terms of the overall financial planning, I think it's not about like when to invest. It's about in terms of savings, in terms of building your savings. The earlier you start, the better it is. So if you're a student, or if you're in your, say, mid-career, or if, say, anybody who is near retirement, I think savings is one concept which I think is sort of so important, that putting aside a certain amount of money on a regular basis is what matters at the end. So bit by bit, if you are setting aside a certain amount, and especially for people who are at their early stage of their career, I think equities or longer duration assets make a lot more sense. And in that case, momentum at the moment, I think, fits really well. So the answer to the question would be that you should start, as soon as possible. And, you should do that on a regular basis. That's what matters, because that's where the impact of compounding really builds up. And you could end up saving a lot more money than if you do it, say, intermittently, or you're doing it on a sporadic way, saving for a few months. And then again, you sort of ending up spending the entire money, and then you say a few years down the road, you start building up again. So it's always good to do it on a regular basis. That's the point I really wanted to convey. Now, moving on to the few questions, let's first touch upon the rebalancing part. So basically, rebalancing is an exercise that, in our case, in case of JSMF ETF, we do it on a monthly basis. So in that exercise, what we do is that we do all the filtration and the stock selection criteria. We do that all, the entire exercise all over again. And we come up with a list of new stocks, which are supposed to be entered into the ETF portfolio for the remaining, or say for the following month. And say on the fifth working day of every month, the rebalancing activity is done. And for that particular day, the NAV is put on hold. And then this trading, it's you can trade the ETF, say, from the next following day onwards. So rebalancing is as simple as that. And since the good part is that all this information is, say, posted on the stock exchange, on the data portal, the DPS, as we call it, on the website, you can just enter its symbol JSMFETF, and you can see for yourself all the basic information. Likewise, you can see more details on our website as well as on our sort of YouTube page where we had conducted a few other information sort of on knowledge sessions which are available there. Similarly, in terms of, there was one question regarding the creation basket. So I think this is a little sort of confuses a lot of investors. I think to keep things simple, in terms of ETF, like for all the ETFs, the basic concept is that ETF represent whatever stocks that it holds in its portfolio. So whenever you are a buyer in the ETF, you can imagine, or you can just consider that, you are buying those 10, 20 odd shares, which are basically constitute the ETF portfolio. So that's what happens. So if you're buying, the market maker would be buying those 10 constituents, say in our case, it's these 10 stocks. So the market maker basically buys those 10 shares. And this entire exercise, to make it mathematically and arithmetically more simple, there's a creation basket, which comprises of 10 stocks. And the discussion probably would go a little bit, I think it would make things more complicated, but just to, again, keep things simple, it's just those 10 shares which represent the ETF portfolio. So each basket is basically representing the stocks which are basically in the underlying securities in the portfolio. Every time you're either a seller or a buyer, equivalent amount of activity or the amount of shares are being traded in the at the stock exchange, and that is obviously done by the market maker. Now, in terms of, there was one point raised that since we are just holding 10 stocks, so probably the portfolio is not too well diversified. Well, that's a good point, but in our case, since we do the rebalancing more often than other ETFs which are available in the market, in which case their rebalancing is done, say, on a quarterly basis, and in some cases done, say, semi-annually. And if you look at in the global space, this rebalancing exercise is the frequency, it sort of differs from the nature of the underlying fund, right? Since in our case it's done like on a monthly basis, so you get an exposure to a lot of multiple, or say different sort of stocks. Say in a particular period, say in a 3 months or a 4 month cycle, maybe a certain sector might be performing really well. So the fund will going to pick up, courtesy of the momentum factor, it will pick up that sector or the stock. And maybe on the following month, there might be some other company which might be doing well from, say, a consumer base or maybe some other sector. So that's how you could implicitly get the benefit of a diversification. So that's basically the key idea. And lastly, I would like to just quickly touch upon one more question, and that is probably should have covered earlier in the presentation, is what is the current constituent, like what are the 10 key holdings at the moment. So again, I would just like to highlight that you can see this list on the stock exchange as well as on our website, jsil.com, and you can see those 10 shares. So it's all publicly available list. So at the moment, it's Sasgar Engineering, which presently holds 20% weight in the stock. And as a lot of you would know how well the stock has really performed. So probably that's one stock which should come in the mind, that this probably would be the one stock that should be holding the most weight in the in the index at the moment. And that is actually the case. Then we've got Airlink, 19%. It's National Refinery, around 14%. Honda Car, 10%. Then it's GHNI, 9%. FFC, 8%. DG, that's DGKC, that's around 7%, and then FFBL, Fessel Bank, and Evincion, that's the rest of the 3 stocks. So these are the 10 stocks at the moment, which will get rebalanced, as the portfolio will get rebalanced on the 5th working day of June. So you will going to see a new list over there, and see the performance attribution, as I could see a few questions over there, that what were the main contributing stocks which sort of helped deliver the fund such a wonderful return. So in terms of that, I've got a list of stocks, since there's been a long list which have, a long list of stocks which have contributed over the period of time towards the fund return. So again, to start off with the latest one, it's Sasgar Engineering. Among the blue chips, it has been Hupco, PSO, then PSMC, Pakistan Suzuki Motor did really well a few months ago. So that contributed a lot. Then GHNI, as you could see, the auto sector is doing phenomenally well. Airlink, again, is one of the stocks which contributed really well. Then it's EFERT, Angro Fertilizer, Mizan Bank, PPL, and the list goes on. I think we have sort of, at least I tried my best to do justice with the topic, and we tried to keep the conversation as simple as possible so that, the idea could get across. In the end, all I would like to say is that this presentation, this webinar session will be we're going to be putting this on our YouTube channel. So if anyone would like to forward this information session to anybody in your circle, in your community. You could sort of log in to our YouTube channel and sort of get access to not just this particular webinar, but to a lot of topics that we have covered lately pertaining to investments. So thank you so much for taking out the time to attend this webinar, and we're looking forward to seeing you again in the future. Thank you.